Hello, everyone, and welcome to the Monday Open, hosted by the Vantage private client team. My name is Ollie, and joining me today we've got Steve. How you going, Steve?
I'm good. Yourself, Ollie?
Yeah, going very well, thank you, mate. All
Bit
right,
of
let's
a
touch.
emphatic win as well by Seattle
Oh, mate.
Seahawks.
Oh, my God, what a boring game. All right, so let's move into the agenda for the video ahead. So, for any of our returning viewers, this will all look very familiar, but for any of our new faces here, this is how we normally run it. So, starting out, we'll take a look at the major events from last week, take a look at our key themes, and see how this drove prices. We'll then look at the week ahead. We'll put a spotlight on some of the big events for the week coming up, see how this fits in with our key themes, and give our take on where we think prices will go. We'll then move into the technical corner where we'll put a spotlight on a couple key different markets and analyze them using our technical indicators. And lastly, we'll move into the Q&A section where Steve and I will answer some of your guys' most commonly asked questions from last week. As well as you guys can see on your screen as well, I do just want to touch on that anything we say in this video is very general in nature and doesn't take into account any of your circumstances. Any of the projections we give are not guaranteed, and past performance is not always a reliable indicator for future performance. So tucking into the video. So starting off on your screen, you'll see your guys' top 10 traded products from last week. In there, got Bitcoin in there, which I think is grabbing a lot of the headlines. I will touch on the Bitcoin moves in a little bit later in the Q&As. But how about you, Steve? Any surprises?
No real surprises, especially with the volatility last week, especially in gold, silver, as well as Bitcoin. Plus, good to see a JPY pairing, considering obviously the elections over the weekend. So let's maybe deep dive into last week. So we did have the central bank. So might just start off with the RBA. So we saw interest rate hike of 25 basis points from 3.6 to 3.85. As we kind of predicted earlier, we kind of knew the decision, so there wasn't too much of a surprise with that. It was just more the sort of forward outlook from Michelle Bullock. So speaking to it, it was very sort of hawkish. So a lot of people just really looking at the sort of speech. So I mean, even with the RBA statement, they basically said while inflation has fallen substantially since its peak in 2022, is actually picked up material in the second half of 2025. So the sort of projections that the RBA is looking at is actually now forecasting that the CPI, so Consumer Price Index, could actually peak at 4.2% in the middle of this year, up from 3.7% in the November forecast. But like what we've mentioned previously, the trim mean, so inflation is the preferred mean when it comes to the RBA. So they could be looking at sort of 3.7% by the middle of this year instead of the forecast of 3.2%. So quite significant with the inflation. There's a bit of, I guess, a bit of a blame game from the sort of politics side. So kind of, RBA kind of inferring when it comes to the government and so forth. So pretty interesting to see with that. There was no real surprise, but quite a lot of questions, especially around whether the RBA kind of regretted the decision as to um, you know as to the interest rate cuts last year, whether they did it one too many. But obviously, it was data dependent, as most of the central banks kind of say during the statements. Ollie, any sort of thoughts about the RBA and what the sort of statement said?
I mean, it's not really too many surprises. I actually did find it interesting what you were saying just there about does the RBA actually regret cutting their rates when they did? I think at the time it was very justified to doing it, but I was actually thinking as well, it made me laugh. I saw this article posted out by Channel 7, funny enough, said there's a few analysts out there that are actually blaming the Barmy Army off the back of the Ashes series, saying they spent too much and that's what
Yeah,
pushed the inflation up.
that's a good one, Ollie. Obviously saw that sort of meme, so it was good to see a bit of humor,
Not, no
especially.
surprises in that.
But talking about England, Bank of England basically held rates at 3.75 as expected. We also saw the ECB hold at 2.15, which ties into a lot of the sort of data points that we saw. So especially um, you know the CPI data from the eurozone, seeing that there's sort of high inflation. So Again, it seems to be a sort of theme that we're seeing across the world when it comes to highs of inflation and trying to have that sort of dual mandate of controlling the employment. A lot of the activity last week and a lot of the volatility came from not only just the US data, so more sort of unemployment. So it was a bit of mix, obviously, with the ISM PMIs, manufacturing and services coming in higher than expected, showing the sort of business aspects, but also the unemployment and the sort of potential that there are more sort of unemployment concerns when it comes to the US. So some of the even the sort of private sort of surveys saying that the unemployment it could be as high as 2009, going back to 2009. So we did see a lot of volatility, especially within commodities and safe havens, as was the risk on commodity, the risk on sort of assets. So yeah, especially Bitcoin. Bitcoin was probably one of those bigger ones. We'll probably deep dive into that a little bit further as to the sort of price. We also saw quite a few monumental sort of um, events that occurred last week. So we saw the government shut down 2.0 ending briefly. So it was only a really short amount of time compared to the first government shutdown, as well as really the Dow Jones breaking through that psychological barrier of 50,000 for the first time ever. That was on the Friday. As per Trump, he's come out and said that it's going to double. So I don't know whether we're going to see that anytime soon. But yeah, it at least he's predicted that it broke that 50,000 psychological barrier. But as for doubling to 100,000, yeah,
Depends
that's
how long
pretty.
he thinks that's going to take. I mean, that
Um,
being said, it went from 40 to 50 very quickly. So,
yeah. No,
I mean,
definitely. And a lot of the volatility was actually caused by Anthropic, the releases of their new AI tool, Claude, as well as a lot of the earnings in regards to the sort of Mag 7, looking at the actual spend in AI and concerns, again, it's that sort of lingering concerns around the, whether the actual AI spend's um, going to help when it comes to the sort of the return on investment. So we did see that sort of volatility. The Anthropic came up with the sort of tools that actually puts the legal profession into a review. So yeah, interesting to see with that. But yeah, also the Bank of England, the policy vote. Any thoughts on that, Ollie?
I did actually find that one quite interesting because I think they held their rates 3.75. It was very widely expected, but nobody expected the vote to be as tight as it was. It ended up actually being four members in favour of a rate cut, five in favour of holding it. So as a result, I think actually we did see a lot of traders start speculating on the forward outlook for the Bank of England. So you got it in the all-time highs there. The FTSE 100 climbed up to an all-time high off renewed hopes for a near-term rate cut. I think we did see some weakness on the pound, but that was quite mixed, driven by a lot of USD moves and among other currencies. But it definitely did surprise me as well. I thought it was a very firm chance for a hold, given the inflation situation going on over in the UK. But to move into the week ahead as well. So starting off, we got not really starting off. In the middle of the week, we got a public holiday for Japan. I've spoken too much about that. I'm going to stay quiet.
I
And then
think
we got
I think that's probably ideal. But yeah, no,
it's all done
obviously
out of
Japan.
jealousy.
Yeah, obviously the public holidays in Japan. Another one for the middle of the week. But actually talking about the theme of Japan. So this week, obviously the volatility from the elections over the weekend, as well as there's been articles earlier today when it comes to Japan and around how the government's prepared to sort of intervene, with the one-sided yen. So right now, at the moment, the yen, is the sort of one way could be that's going up, but ideally the government wants to ensure that the yens are lower, because they're really worried about that sort of government, the sort of debt that the Japanese has. So to give it perspective, they've got the largest sort of debt, about 240% of their GDP. So it's quite significant. But we've got a lot of probably a lighter week this week. The China data should play on to, I guess, the risk on sentiment. So it'll be key to see that sort of data to see how it impacts the likes of the Aussie, for example. We've got the UK GDP, which should be important, but a lot of the US data will kind of tie into, I guess, a lot of the themes last week. And it'll be really looking at probably the close thing is around the employment. We've seen that this inflation print has been a little bit lower, but the employment themes is going to be really vital to see how that goes. So, any sort of themes that you're really looking at, Ollie?
I mean, kind of just said it there. I think it's the unemployment in the States, I think, is going to be the real sticky point for how the week shakes up. Obviously, we've seen historically the US data. We see a lot of people try to get ahead of the Fed decision, try and make the moves in while the markets are pricing in. So we could see some dollar weakness if that data does firm the case for a rate cut from the Fed. But yeah, it's just kind of a wait and see for it. But speaking of the US dollar, I guess now is a good time to shift into the technical section. So starting off on your guys' screen, you'll see I've got the euro against the US dollar. This is on the weekly chart. So starting out in here, we can see pretty much dating back across the start of 2025 up until now, we are in a large bullish trend, although we have been ranging for the second half of 2025 as well. But we can see by the bullish trends here, we can see a sequence of higher lows alongside higher highs, even if the gains on there are a little bit weaker by comparison to previous weeks. But we are seeing a sequence of higher highs and higher lows, which is telling me that the bullish trend is still in play. Also supported by our moving averages, which are fanned out, all evenly spaced, pointed in the same direction, which historically does act to the bullish momentum that we are seeing. Looking on our technical indicators, we can see that the MACD has crossed over its signal, which again is another signal for bullish momentum on here. But where I do think the week could be significant, even though we are in a long-term bullish trend, I think the sizable declines coming off from its recent highs at 1.2 a couple of weeks back is actually going to be quite important to shaping for the forward outlook where we are going to. So moving this now into the daily chart for the euro dollar. Most recent price action, I'm going to go back to the start of November. We can see the prices came up, found resistance around the 1.18, traded back into its moving averages to find support at 1.16, then shot up to make I think it's about 4-year high, I think I saw, at the 1.2. Then we did see a quick sell-off, and now prices have been consolidating over the previous week at its 20-day moving average, which actually is at the same level where we did previously find resistance. So I think considering we saw a clean break and a hold above its prior resistance, came back to find support on here, I do think this could be a confirmation of a bullish signal for here. So if I want to make the moves on this one here today, I want to see it break last week's highs first of all, which is about 1.185. Once we do see that, we can see a break and a hold above last week's highs. I do think it is a pretty good sky towards a retest of its all-time highs. But I do think it does need to get over the psychologically significant 1.19 for it to do that. So we can see a break here, I can see a move higher, and then if we see it find resistance here, however, I do think we could see prices move further into their moving averages down here, potentially down towards the 20 to 50-day once again. If we're looking on the technical indicator side as well, our MACD is underneath its signal, which tells me there is some bearish pressure, at least for the more short term. We've also got the RSI, which is underneath its signal, adding to that bearish pressure on here. So I am looking for a signal either side. If we do see prices move up today and fail to break last week's high, we could see it come further down. Either side, though, I do need to be very conscious of my risk management strategy. So I think depending on which side I'm going, I'm looking to manage my risk around my moving average levels here with a target towards previous swing highs and swing lows. So the next market I want to take a look at is the US dollar against the Canadian dollar. Again, I'm starting on the weekly. So most recent price action has been largely range bound, I'd say between 2022 up until now. But the most recent price action, looking from 2025 up until current, is actually quite bearish. We can see it made a high in February 2025 at the 1.47 sort of level, and it's been a pretty steady downtrend since. You can see that supported by a sequence of lower highs alongside lower lows as well. We can see our MACD is below its signal, adding to this bearish pressure. But I also like that we are seeing some divergence in the MACD alongside its signal, which is telling me that the momentum, the bearish momentum, is still very much in play. So to get an idea of where we could be sitting for the week ahead, I'm moving now into the daily chart. So we can see, again, adding to the bearish pressure, we're seeing our moving averages are all fanned out, evenly spaced, all pointed in the same direction. So for last week, though, we did see prices after coming to make a high around here, around the 1.39, came down and traded to a multi-year low, dating back since September 24. That is, we since found support and had a pretty strong bounce off to trade into its moving averages here. But for where we are sitting now, we can see it found resistance at its moving average, but this also did previously act as support. So pretty much the inverse of what I was saying for the euro dollar there. Because we are now finding resistance around its price support, it's adding to that bearish momentum, but I'm looking for a signal of confirmation for this. If I'm a seller in this market, I'd like to see prices break down below this previous swing low, trade down to its next key level, where I'll be looking for an entry to target its swing lows and make a lower low on that one as well. Similarly, though, if we fail to break below this level and we trade further up into our moving averages, we could see it then look for a retest of its swing highs. But either side, I'm looking for a signal to confirm the momentum. I would also be very conscious of my risk management strategy for trading on this pair, probably either side of its swing highs, swing lows, or towards its moving averages, depending on if I am a buyer or seller in the market. Okay, so that brings us to the end of the technical section. So now moving into the Q&As. Steve, up to you.
As for question one, it's what's the impact of the RBA on the ASIC 200? So with that question, it's fairly significant. We've obviously seen a bit of reaction, especially with the interest rate hike, as well as when the actual inflation data came out prior to the decision. It basically meant that the actual forecast, so a lot of the company earnings is based on how much it's actually going to cost, and potentially more sort of job losses, unfortunately. So there's a lot of factors that go into that, and a lot of the biggest of companies are really just readjusting and forecasting future sort of years. So it does impact quite substantially. But yeah, obviously with Fridays, in the US, it's kind of a catch-22 when it comes to the US markets doing well versus the RBA interest rate hikes. So pretty interesting there.
Thank you, Steve. And so I'll take for question two. So this one I actually have spoken to a couple of people about. In your opinion, what has caused the decline in crypto markets last week? So for context, Bitcoin last week dropped 7.62%, was actually down as low as 21% at its weekly lows, trading below 60K for a 17-month low. As well, Ethereum was down 8.59% on the week, down 24% at its weekly lows. So reason is why the decline. So as the Vantage market analyst Hebe Chen actually did write about earlier today, says the decline is a result of broad speculative de-risking, essentially meaning a risk-off sentiment is leading to the declines. Safe haven flows previously, which might have gone into Bitcoin, which is seen as the digital gold, I think that is more or less wiped out. So there's been sizable declines for the risk-off sentiment. This is also shared in the equity markets, with the Nasdaq and S&P trading into multi-week lows before Anthropic's AI announcement lifted. Following the announcement from Anthropic. Other factors in there, seeing volatility in gold and silver is driving investor flows into the precious metals markets. Seeing profit taking could also be weighing on cryptocurrencies, as well as US dollar strength, as the DXY did gain 0.5% last week on week. Okay, so I think that brings us to the end of the video here. So A recording of this will be uploaded on YouTube once we have concluded. As well, we will be posting a link to this in our VIP chat room as well as on Telegram. As well, if anyone is looking to get involved with the Monday Open, send through any questions, please feel free to send them to Steve or I directly or post them into the VIP chat room. So thank you everybody for watching the video today, and Steve, I'll see you later.
Thank you, Ollie, and enjoy your evening, everyone.